This essay is for informational purposes only, not financial advice. It is based on publicly available information and aims to provide a balanced overview of the Adani Group and Hindenburg Research controversy. The narrative dissects a complex financial event involving a powerful conglomerate and an activist short seller. The goal is to present the sequence of events, claims, counterclaims, and regulatory responses. Understanding this story requires examining the facts from all parties involved. The aim is to illuminate the mechanics of the conflict, not to declare a victor. The Adani Group's story is a reflection of India's own economic transformation and ambition. As the country opened its doors to the world, a new breed of entrepreneurs emerged, eager to seize the opportunities of a liberalizing economy. In 1988, a young Gautam Adani founded a modest commodity trading firm in Gujarat. What began as a small operation soon evolved, as Adani's vision and risk-taking propelled the business into new sectors and markets, laying the foundation for what would become a colossal empire. The group's trajectory was nothing short of meteoric, mirroring the rapid urbanization and economic reforms sweeping across India in the 1990s and 2000s. Adani's growth became a symbol of the country's aspirations and newfound confidence. Sensing the need for world-class infrastructure, Adani pivoted from trading to building assets, starting with the ambitious Mundra Port project on India's western coast. Mundra Port quickly became the cornerstone of a vast national logistics network, connecting India's heartland to global markets and transforming regional economies. The Adani Group didn't stop there. It expanded aggressively into power generation, mining, and infrastructure, executing some of the largest industrial projects in the country's history. By the 2020s, the Adani name was synonymous with India's core sectors: energy, transport, and infrastructure, touching the lives of millions. The conglomerate became the largest private operator of ports and airports in India, reshaping the country's connectivity and logistics landscape. This rapid expansion led to a dramatic rise in market valuation, with Adani Group stocks soaring and investors celebrating unprecedented gains. Gautam Adani himself briefly became the world's third richest person, a testament to the scale and speed of his group's ascent. Yet, as the empire grew, so did concerns about its mounting debt and complex corporate structure, raising questions among analysts and investors. In early 2023, the group's financial architecture came under intense scrutiny when a US-based research firm published a damning report shaking investor confidence. This set the stage for a dramatic confrontation, thrusting the Adani Group into the global spotlight and testing the resilience of one of India's most powerful business empires. On January 24, 2023, Hindenburg Research published a shocking report that sent ripples through the financial world. The 100-page document accused the Adani Group, one of India's largest conglomerates, of engaging in stock manipulation and fraud on an unprecedented scale. Hindenburg claimed that their findings were the result of a meticulous 2-year investigation involving interviews with former executives and a thorough review of internal documents. The report alleged that the Adani Group used a complex network of offshore shell entities to artificially inflate stock prices, creating an illusion of financial health and stability. This, in turn, suggested a dangerous feedback loop where high stock prices enabled the company to take on more debt, further inflating the bubble. Hindenburg also questioned the credibility of the company's corporate governance and auditing practices, suggesting that oversight mechanisms were either inadequate or compromised. The report painted a picture of a house of cards, unstable at its core, and warned that it could collapse under its own weight at any moment. As a short seller, Hindenburg stood to profit if Adani's stock fell, adding another layer of complexity to the unfolding drama. The timing of the report's release was particularly impactful, coinciding with Adani's major public offering, which only intensified the fallout. The report directly challenged the group's narrative of robust financial health and growth, casting a long shadow over its future prospects. It was a direct assault on one of India's most powerful business houses, shaking the very foundations of its corporate empire. The allegations were detailed and damning, sparking a financial storm that left investors and analysts scrambling for answers. The gauntlet had been thrown down, setting the stage for a high-stakes battle in the world of finance. The Hindenburg report hit the Indian stock market like a tidal wave, sending shockwaves through every corner of the financial world. Investors, analysts, and even ordinary citizens watched in disbelief as the news spread rapidly, triggering panic and uncertainty. Adani Group stocks plummeted almost instantly, with billions of dollars in market value evaporating in a matter of hours. The sudden collapse left investors scrambling to make sense of the chaos, as red arrows dominated trading screens. Adani Enterprises' crucial share sale, which was meant to be a show of strength, now faced a severe crisis of confidence. Doubts about the company's stability grew louder, and the mood in financial circles turned grim. The sell-off was relentless, with stocks repeatedly hitting lower circuit breakers. Each halt in trading only heightened the sense of panic, as investors wondered how far the market could fall. In just days, the group's market capitalization eroded by over $100 billion, a staggering loss that sent ripples across global markets and raised questions about the future of one of India's largest conglomerates. Gautam Adani, once among the world's richest men, saw his personal fortune tumble dramatically. The speed and scale of the decline were almost unprecedented, leaving the business world stunned. The timing of the Hindenburg report couldn't have been worse for Adani Enterprises' public offer. It cast a long shadow over the fundraising effort, shaking investor trust at a critical moment. Despite the offer being fully subscribed, the company made the extraordinary decision to call it off, citing the need to protect investors from further volatility and uncertainty. This decision, while intended to reassure, only deepened the sense of crisis. The market grew even more anxious as investors realized the scale of the challenge facing the Adani Group. The narrative shifted overnight, from dreams of unstoppable growth to urgent survival. The focus now was on damage control, crisis management, and restoring even a shred of confidence. The market braced for what would come next, with everyone, from small investors to global institutions, waiting for the next move in this unfolding drama. The story was no longer about unstoppable growth. It was about survival, resilience, and whether the Adani Group could weather the storm that had engulfed it so suddenly. The Adani Group mounted a robust defense with a 413-page rebuttal. It refuted Hindenburg's allegations, framing the report as an attack on India. The group asserted transparency and compliance with Indian law. It addressed 88 questions, explaining corporate structure and debt levels. Adani highlighted Hindenburg's financial interest in driving down stock prices. Despite the detailed rebuttal, market confidence remained shaky. Investors were caught between a damning accusation and a forceful denial. The rebuttal laid the groundwork for legal defense, but didn't stop the bleeding. The battle of narratives had begun, but the financial battle was far from over. The market collapse drew attention from India's highest authorities. SEBI and RBI investigated Hindenburg's claims and assessed systemic risks. The Supreme Court appointed an expert committee for an independent probe. The committee found no conclusive evidence of stock manipulation. The court backed SEBI's investigation, granting more time for a thorough probe. Gautam Adani declared, "Truth has prevailed," after the Supreme Court's decision. The decision was a major vindication for Adani, shifting focus to regulatory findings. The judicial process provided relief, but the financial battle continued. Adani Group focused on recovery and rebuilding investor confidence. The priority was addressing debt and shifting to a conservative strategy. The group prepaid loans to reduce leverage and calm lenders. A major vote of confidence came from GQG Partners' $1.87 billion investment. This investment validated the group's asset value and growth prospects. Other capital sources followed, raising funds for growth projects. By late 2023, Adani shares staged a remarkable recovery. The recovery strategy centered on debt reduction and strategic fundraising. The group pulled back from the brink, stabilizing its financial position. Just as Adani seemed to stabilize, new storms gathered. In August 2024, Hindenburg alleged a conflict of interest involving SEBI. The report caused market jitters, despite SEBI's denial of the claims. A more serious development emerged from the US in November 2024. Gautam Adani and others were indicted for bribery and fraud. The charges linked alleged corruption to substantial financial gains. The US indictment brought severe legal and reputational consequences. The Adani Group has yet to respond comprehensively to these charges. The controversy ensures continued legal and public scrutiny. The shadows of controversy continue to lengthen. The Adani-Hindenburg saga has profound implications for India's market. It raises questions about corporate governance and regulatory oversight. The saga exposed polarization in market perception of Adani. It highlighted the tension between growth and transparency in emerging markets. The role of regulators, particularly SEBI, came under scrutiny. The case may spur reforms to enhance transparency and oversight. The affair underscores the fragility of market sentiment and narrative power. While Adani showed resilience, legal challenges cast a long shadow. The final verdict is on the architecture of trust in the Indian market.